Hello everyone, welcome to the ichimokujcharts.com daily analysis for the S&P 500 for Wednesday, May the 30th, 2012. A change of trend today, and a candle with a lower high and a lower low, a very large black-bodied candle. So the sellers are certainly supporting this change of trend. The black body denotes the sellers making a substantial amount of net bearish progress on the day between the open and the close. And they've closed down towards the low, and that tells us that they've closed with very strong control of the market, and they've shown very strong commitment to taking this market lower for most of the trading day. We have seen some upside price rejection from this area around 1310, and we saw here previously with these two candles where buyers came into the market around this area, so that could be important moving forward. But we also have very strong support in a zone all the way below here down to the round number 1300 and just below to 1295 and to the swing low at around 1291. So some very solid support down below. In terms of the Fibonacci extension, and what we're looking at here is the Fibonacci extension from yesterday, and we're looking at the relationship of that uptrend compared to the previous uptrend. So the uptrend that just terminated, and it terminated at exactly 100% of the previous uptrend. So this once again highlights how important these Fibonacci extensions can be, and we've seen the market trade lower today with a change of trend to the downside. The Fibonacci extension has been quite helpful because for the previous candle we had a white-bodied candle with the buyers in control and very strong in this market, and the only clue that we had to any potential change of trend was this 100% level. So potentially we should have been watching the low of that candle for the negativity that we're seeing in this market today, and we have seen that change of trend confirmed. In terms of the new Fibonacci extension, and what we're looking at now is this new first time frame downtrend in comparison to the last time the market was trending down here, only a one candle downtrend, but the extent of it was quite large. And what we're seeing here is that the market has found support at the 78.6% level at 1309. The low has traded down to there and it's been rejected, so that tomorrow will be an important level. It's only a minor level, however. The more important levels are the 38.2, 50%, 61.8 and 100%, and then beyond there the 161.8% level. So that's a minor level, but if we do see bullishness coming in, there is a possibility you could see the market trading higher. If the market trades down through here, then we should be watching the 100% level at 1302, coincides with the round number 1300, which we know will be very strong support for this market. And below there we have the 161.8% level at 1283, but I doubt the market will be trading down there over the next day or so. Perhaps in a few days' time if we do see continued downside momentum. But there still is a possibility that we could see the market bouncing off this 78.6% level, but really the sellers have strong control of this market. There aren't any signs at the moment whether we will see a change of trend at the moment. Having said that, however, if we look at the Fibonacci retracement, what we're looking at now is the relationship of the current downtrend to the previous uptrend, and we have the market finding support at the 61.8% level. Coincides with that level 78.6 on the extension, and now the retracement. So the confluence of the support here may be very, very important, and it does offer potential for a change of trend. So let's watch if we see any bullishness coming into this market, but the 61.8% level is a very important level. If the market trades down through there, then 78.6 at 1304 is important, and the 100% at 1295, which coincides with that important area of support based on peaks and troughs. In terms of Ichimoku, we have a bearish market in the long-term time frame by trading below the cloud. The market remains bearish in the short-term, in the medium-term time frame, by trading below the Kijun-sen, but we're now neutral in the short-term time frame by trading at the Tenkan-sen, and a very strong possibility that we will trade through the Tenkan-sen and we'll have a bearish market in the short-term time frame. There is a possibility that the market will bounce off the Tenkan-sen. We know that the Tenkan-sen will hold as an area of support or resistance. More likely that when you have solid downside momentum, in this case, that we see that area to hold as resistance. Once we've bounced through there, the buyers certainly don't have enough upside momentum for the Tenkan-sen to hold as strong as in this opposite scenario when we've been trending down very strongly, but there still is a possibility that it could act as an area of support. So a bearish market in the two higher time frames, supported by the Chikas band, which is below the corresponding price action. Other than for the confluence of those Fibonacci levels, the market has built some solid downside momentum. There is some support from these candles here. We can see the rejection from there around 1310, but the momentum is certainly with the sellers, and it's likely that the market will test down to the round number 1300.